All right, guys and gals, back after an Easter Passover break and back in the action once again here this evening. It's time to get back to work. It's Monday evening after all. It is April the 13th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I have a jam-packed video newsletter in store for you tonight. As you can see in the background, the charts are all ready to go. We get some gold, we get some S&P, and we get some crude oil on the video tonight. A lot of really great setups setting up for tomorrow's trading session. And of course, we got just the calendar. It's the third week of the month. Third week of the month always means a couple key components. We'll grab the calendar and we'll make sure you know what to pay attention to here this third week of the month. So as always, it is great to be here with you all. Before we jump into the video though tonight, make sure you subscribe to this YouTube channel. I don't want you to miss any of the good stuff we publish on this channel every day. Also, don't forget, if you have any questions about anything we talk about tonight in the video, drop those questions in the comment section below the video tonight. And if you tune in every evening, if you spend an hour with me every evening, Monday through Thursday, then I really appreciate you tuning in every evening. Hit that thumbs up button for me if you're part of the group that tunes in every single evening. I couldn't do it without you guys, so thank you so much for sharing the love here on this nightly newsletter. But enough of the introduction. Holiday weekend is behind us. We got to get back to work here. Let's get back to work tonight by kicking off the video with the economic news calendar. Courtesy of Econo Day, let's take a look at what the schedule looks like. It's the third week of the month, and of course we know that the third week of the month is typically options expiration week, which means as we go into the end of this week, we do expect to see some increased volatility. Now, that shouldn't affect us tomorrow or Wednesday, but Thursday and Friday, you definitely will anticipate markets like the S&P, for example, all of the E-minis, of course, right, will probably be a little bit peppier, a bit bouncier than normal, right, very impulsive price action we typically get into the end of that third week of the month. Now, of course, as we look at the news we have here for tomorrow is Tuesday. It is April the 14th. As you can see, there really isn't a lot on the schedule here for tomorrow. We get some import-export prices at 8:30 Eastern time. It doesn't look like there's any major scheduled news that'll really hit our radar here for tomorrow. Now, there's a lot of stuff going on in this world right now. You know, today we heard from the U.S. President Trump about planning on reopening the U.S. economy. We also just heard, I live in Los Angeles, and I got a heads up from our Governor Gavin Newsom in Los Angeles, or in California. He's up north, obviously, as a governor. But he talked about the plan for reopening the economy here, or reopening the state of California. So it does sound like a lot of local and national authorities are starting to put the plans together for reopening the world, or reopening, right, their local economies there. That, I would assume, is really going to be the biggest known unknown as we go into this week. We're seeing the curve start to flatten out. Everyone's kind of waiting to see that big collapse on the curve. It doesn't look like we're quite there yet, but boy, I mean, I'd be lying to you if I said, everyone I talk to right now is very optimistic about how effective this shutdown has been. So definitely kudos to everybody who participated with it. I've been locked down for almost 5 weeks now here in Los Angeles, and besides getting a haircut, it's been a pretty busy last few weeks. It hasn't been that bad here, but I know a lot of people have been really pinched on this. So my heart goes out to everyone being affected by this. We also, of course, have that OPEC production cut. We heard about that late last night, a 20 million barrel per day production cut. It doesn't look like it did very much, right? That's a 10% basically haircut off of how much they pump out of the ground here around the world. So at this point, it doesn't look like it had much of an impact, and we'll grab a look at the oil chart here tonight on the video. But it doesn't look like it had much of an impact. Will they pile on? Will it fall apart? You know, I've been a pretty big critic about the OPEC production cuts. I've been around this business for a long time, and it's very rare to see a production cut actually stick. So the moment we hear about everything falling apart, what happens is everybody says, yeah, we'll cut production. But then all of a sudden, a couple of weeks later, we realize nobody actually cut production. And when that starts to hit the news headlines, that's when things should start getting really fun here on oil. We'll grab a look more on oil here tonight on the charts here. So those are really the big kind of known unknowns here. What do the plans look like to reopen the country? We're waiting for more details on that. And of course, the OPEC production cut. Not will it hold. I don't think anyone's worried about that. But when will it fall apart? I know. I've been a bit critical of these OPEC production cuts because we really have never seen them work very well in the past. So that is exactly what I've got my eyes and ears open for tomorrow. Speaking of tomorrow, and every morning, 8 o'clock Eastern time. Remember, guys, we're going to get together tomorrow and trade this strategy together. Every morning, 8 a.m. Eastern time, Monday through Friday. What I'll do tonight is I'll put all the membership links to get registered for tomorrow morning's trade room. You got to be a member, and I'll put all the information for you down in the description of this YouTube video. If you're on the blog right now at Sideways Markets, there'll be a big blue button there to take you over to the website to get registered. So we'll talk more about the rest of the week and a bunch of news you can see here on Wednesday and Thursday as we go into this week. But again, what will we hear about regarding the plans to reopen the economy, and how will this OPEC production cut start? Will it hold, right? When will it fall apart? Now, got a bunch to talk about tonight in these charts here. We get some oil, we got some S&P, and we got some gold. Now, the S&P and the crude oil are really tied together right now. I'm going to start first here with the yellow metal, the black gold, the Texas tea. This is a really interesting scenario here on gold, and I want to make sure you guys have a good plan here for all you gold bugs here tomorrow. Now, what do we know about gold right now? First of all, we know the market is bullish. That is quite obvious. We also know that a good chunk of this was spent inside of a range here today. And then we get this big, strong break running higher. Now, this is a tricky situation because, as you know, in a bull market, I want to buy low. And we're not exactly very low right now, are we, right? We want to buy at support. We want to buy low in a bull market. And I don't know about you, but that doesn't look very low on this chart. So we definitely know this is going to be a very aggressive area for buyers to be buying. We also know we have a range in here. What does a range tell me to do? Buy low and sell high. So that range tells me I should be trying to be a buyer down underneath that range, and I should be selling up here. So, again, the odds are now kind of stacking against us here as we're trying to justify being a buyer up here right now. Now, remember, the range is going to be a magnet. Right? That trading range down here, that will continue to be a price magnet. So, what goes up will oftentimes come right back down. But the big deal is this, right? Here's the big deal. The big deal is anytime we see this much strength in one direction, we're almost always going to get a retest of the high. Anytime we see this much strength in one direction, it's almost a guarantee we get that retest of the high. So no matter how high we are on this chart, the fact that we have this big, strong move up, and again, I realize we're high up on the chart. I realize we're above the top of that trading range. All signs point to right now, they point to a second leg and then a move back down into that range, or they may continue and run higher with an official breakout of this trading range. So to kind of summarize this, we know we're bullish. We'd like to be a buyer at support levels. So what I'm doing right now is I'm finding my level of support. I've got a trend line drawn across these highs, down at that low, and I'd like to use that in combination with my battle zone to be a buyer here on this yellow metal. But, again, make no mistake about it, though, this is definitely a sell overall. So we have a very strong move up here. I'd like to grab a nibble to get that retest, because anytime we see a strong move like this, it's almost a guarantee we get that retest. And then I'd like to look for that short coming back down into that range. Or you could also, too, say, well, what if it holds and runs? If it runs, then it starts looking like that $1,800 an ounce here right now is definitely feasible. So let's get our hands dirty here on the gold right now. I think, again, the most important thing is we know we're bullish. So if I want to be a seller, I've got to be very careful right now. We'll talk about the buy side. We'll talk about the sell side. Really, at this point, I know that range is a big old magnet down below. I know that eventually the odds are pretty good we end up back in there unless they can hold this pullback. Now, how do I buy this market? What I'd like to do is get just get a little bit further down on the food chain here, on the chart here, get underneath that moving average, and I'd like to play this against those range traders. So we know the range is there, we know the range is the magnet. I'd like to see us slip underneath the moving average. I'd like to see those sellers come in and try to get short off the EMA, and I'd love to buy right into those stop losses, right, for those sellers. It's a very simple pattern. I call these failure patterns. It'll look a lot like this, to be honest with you. As they pull back below it, the bears will try to sell off of it, and I'll look to simply buy into those stop losses. So strong move up. Let me get zoomed in a bit closer here. Strong move up. Strong move up tells me now I should expect that next leg up. I'd like to get down underneath the moving average. Ideally, I'd like to get just below that little guy right there at that 55. That will be kind of the ideal scenario here, right? But just get down to low that channel, get inside the sell zone, the buy zone there, get those bears, right? Try to grab this thing off the moving average and look to buy into those stop losses. Now remember, we don't want to get greedy on this. The actual target on this is back up to retest the high. Now, if they hold this and we make a run, right? If they hold that pullback now and they make a strong run through, now what I can do is I can call this a breakout pattern, and I can mark up that new high, find a new low, and I can buy off of that low. But remember, this 1, 2, 3 breakout needs to be on strength. It really needs to be strong here as we go. So it's going to be a seller failure underneath the moving average around the low of that channel. That's the key. We're buying off support, but we're leveraging the idea that sellers may be trying to go against that momentum too much and go back into that range here. If I can get underneath the moving average, I can buy right into those stop losses as we go. And then let's do some follow-up on this. If the market really jumps, if it really jumps as we go off that pullback, we know where they're trying to go. What I'll look for is a 2-try trap pattern. If we get that real strong jump, so this will be, of course, a failure setup into what I call a 2-try trap pattern, which is basically just too shallow, right? 2 shallow moves lower, trap below that low. Target at that point now is up around those highs here. Now, they may not get that big 2-try trap. You may get that 1, 2, 3 move higher. At that point, it's a new channel coming in off the highs, off the lows, and we're buying now off the low of that channel. Oftentimes, those buy setups will oftentimes be those failures again. So as we come off, if I kind of zoom in on that area here, right, as we pull back, it's that failure into pullback combination pattern that we talk so much about on this newsletter, right? So if you were to kind of zoom in on that area right here, it's that failure into pullback combination going up to retest that 1800. Now, at this point now, what the kind of second scenario here that I want to prep for is as we go higher, let's just say, for example, we get the failure, we go back up and we stall out now at those highs. Now, at this point, they may end up moving this range. They may just move this range up higher here. So if it sits and goes sideways, we don't want to try to force it lower now. We definitely don't want to buy high in this situation. So now, again, if we see this range start to get moved up around these highs, what do we do with a range? We look to buy underneath, right? Buy low, sell high. I find my support levels below. I mark up my range. I wait for the price to pull back. I wait for that seller failure. And we simply keep focusing on those failure patterns to buy below that low. So again, if we were to go through the high, that's the easy one, right? If they stall out and we start seeing this thing start to roll sideways on this, double tops, double bottoms, moving average is flattening out here now. Now at this point, it's a bull market into a range. What do? We buy underneath the range. When I say range, you say failure patterns, right? Failure patterns, strong, right? Again, pull back off the high. Doesn't need to be very strong. Just want to get underneath the range. What happens is the buyers will eventually run out of bullets up here. That will cause the pullback The pullback, of course, will make everybody, well, not everybody, the inexperienced traders will think this is a reversal. Inexperienced traders, rookie traders love to trade breakout pullbacks. I know because I did that all the time by mistake, obviously, when I was a rookie as well. I would love to buy right into those stop losses. Now you'll notice I've got these bigger channels here, right? So you'll notice here I've got this bigger channel off the high, bigger channel off the low. Those will be definitely some spots we'll be keeping our eyes on here as we try to run this thing, right, and keep this thing going up to that 1800. Now, we got to talk about the sell side here, because the sell side is certainly something we need to respect because it's got a range below us. That range we see underneath us. How can I get short with all of this bearish momentum? There's one pattern I love to use. It's called a nested failure pattern, and this is where knowing how to use a moving average is really going to be important. For example, if I see this market slip below the moving average, and this is very, very important here, and they really get stuck around the EMA, that's a sign the bulls are still very much in control. But if we see these guys come off this moving average with some momentum going lower, now we know we're not as bullish as we thought we were. That's a very important piece of this puzzle, right? So again, we know about the buy going higher here, but if this thing starts to kind of trickle lower here right now, right? If it starts to kind of grind lower, big, strong move down, now we're not feeling as bullish any longer. Now that momentum we saw apparently has changed. Now, I'm going to be careful here because I have this what I think to be a really nice hidden channel here, and I don't want to sell into that rising support. So I've got two components. One is the bullish momentum. Two is that rising support. We've got to be very careful kind of threading the needle on this. My favorite setup, though, is going to be a nested failure to go against momentum and a trap high to avoid selling into that rising support. And again, this will be very obvious once we have a little more information here. Does it stick below the moving average? Right, look back here. See how the buyers, they don't give the sellers any breathing room, right? See how it sticks. The bears aren't given any breathing room, right, whatsoever. Imagine those MMA fights, right, where the bulls have the bears just pinned right to the mat, right, the elbow in their face. They can't get off the mat. There's nothing these bears can do here, and it's no wonder, right, the market slices higher. If they can get some momentum going lower here, that'll be a big change in personality. Again, I don't want to short too aggressively because you got all this momentum here, and I don't want to be selling into that trend line. I've got to be selling short off a trap high as we go back down into that range. Another variable here would be, let's just say it goes 1, 2, 3 reversal, right? Now momentum shifts. Now what do we do now? Now we're back inside that range now. Now momentum is more bearish than it was before. I want to get up above the range, usually put me above the moving average, get buyers to try to buy that pullback, and we can look to sell it from there back down into that trading range. So as you can see here, it all really depends on how this market pulls back right now. Does it get stuck around that moving average? In that case, you want to be a buyer on it, or do we dramatically pull back below that moving average? Situations like this kind of remind me, right? Should I trade it or should I fade it? These are those scenarios where, okay, do I trade the pullback or do I fade the pullback? And it really has everything to do with how the market responds around this moving average. And we get a great plan waiting for tomorrow morning's trading session. Now, don't forget, we're going to do this stuff together tomorrow and every morning, 8 o'clock Eastern time. If you're not there with me tomorrow, the next best thing is to get that deep dive into all of our patterns with our free trading course. I'll put a link up there in the upper right-hand corner for you. The best way to trade it with me is to do it with me in the trade room every morning at 8 o'clock Eastern time. But if you're not there with me, grab that free course, that button that popped up, and again, I'll put all the links for you. I'll put all the links in there for you guys inside of the description of this video, right? And that free course, by the way, will talk all about my favorite entry patterns, my favorite trading strategy. You'll see hundreds of examples, right, of how we apply that to our favorite futures markets. All right, let's keep going. Gold is looking good. And again, gold, do I trade it? Do I fade it? That is the big question right now on gold. Momentum tells the story. Next up here, let's grab some E-mini S&P, because the S&P will kind of lead me into the crude oil analysis here for us today. What do we know about this E-mini besides it was an ugly chart today? Lots of prickly, wicks on this one. You can see it almost feels like if you were to touch the candlesticks, they would probably poke your finger, right? Very choppy. What do we know about this? We know we had a strong move down overnight. Now, we just talked about this. Anytime we see a strong move in one direction, what does it tell me? It tells me that the odds are almost guaranteed we get a retest of that extreme, right? So in the gold, it's a strong bull move up. Very high probability we retest the high. On the S&P, strong move down. Very high probability we retest that low. My job, of course, is to find levels of support to buy off of, find levels of resistance to sell off of, and time the entry with an entry setup. And again, you'll learn more about the entry setups with that free course linked up in the upper right-hand corner. So we know that we've got that big move down. We can easily see, look at that, right? They came all the way down and just kissed it, right? Just gave a little tap at that low. And it looks like, from what I can see so far, it looks like those buyers said, or more correctly, it looks like the sellers said, all right, boys, we're done here. Move it out. And literally the sellers, right? Boys and girls, I should say, right? It looks like the sellers kind of just walked away at that point, because you can easily see the market begin stair-stepping its way higher here, almost as if the bears got what they were looking for and they punched their time clock and they hit the road. That's what it feels like right now. Now, where might these buyers be trying to go? I would imagine they're trying to go back up to retest highs, but I would really assume they're trying to go back and fill that gap. Now, let me be very specific on this. All of these gaps you're going to see on the S&P and the crude oil, they've all been filled. Most gaps will get filled, but if you watch this newsletter every evening, like I know you try to, you'll notice that I always leave those gaps on. These are the weekend gaps. Okay, not every gap is created equal. This is the gap from Friday's close, which of course is at 5 p.m. on Friday, to Sunday's open, which of course is at 6 p.m. on Sunday evening. So last Friday's close, right? And then of course you got Sunday's open. Okay, the closing price from last Friday is right there, right? 27.87. Now, these are not usually very common, but because of the coronavirus spread and the world being kind of uprooted and forced inside for a month and a half, it really has created some very volatile markets. And that is definitely something that has been more common lately. You won't normally see these gaps every single week like this, but right now, that time off on the weekends, a lot of updates on the weekends, and when Sunday night opens up, the markets really can show it. They really show it. The moral of the story, though, is don't expect these every time on Friday, right? But when we do have them, we're going to want to make sure we leave those on as a magnet. And you'll see exactly how we'll use those. If you watch my newsletter often, we use these as magnets. So when I see, kind of the moral of the story here, when I see the bears make that retest, and I see them just pack up their things and leave now I can't help but assume that they're trying to either A, get back up to retest this kind of major top over here, and I'll bet if they get that high, they'll probably get that 27.87. My thought is will they go up and then dump it back down and again, which is very, very likely. A lot of times we see these gap tests and then it dumps right back in the other direction again. Or will they hold it and try to make a hero run now up to that 28.20 area? That, of course, would require a little bit more evidence before we can start being a buyer to go up that high here. So we know that strong move down. We know the buyers are hunting for the gap retest. We also know that we got this range here. Right? It was a pretty ugly chart overall, but the range made it pretty simple. We knew this morning once the market was above the range, our job was to sell back underneath it. And then once we get underneath it, we then look for these kind of reversal patterns. You can see a great example here of a crown reversal pattern, a little trap low off of that low. You can learn all of these patterns, by the way. We'll talk about the crown reversals here on the oil in a moment, because oil is ripe for one, setting up here for tomorrow. But this is one of my favorite reversal patterns, these crown reversals. You get those buyer failures above the high, right? Obviously, we're bearish here, so if you're going to be a buyer off the low, you wait for those bears to try once, try twice, trap low for that crown reversal. You'll learn a lot more about these, obviously, in the free trading course, as well as the premium trading courses here at School of Trade. But the most important thing right now, though, is we can easily see we're back inside the range. What does the range tell me to do? Buy low, sell high. There's obviously bearish momentum right now. So I'd like to be a seller up here, right? I'd like to be a seller as we go higher here and try to retest that gap. I think the only problem I have is this trend line. We talked about this on the gold, where you've got these trend lines coming up. And so if I want to be a seller, I've really got kind of two things going against me right now. I've got some short-term bullishness, and I also have that rising support. So let's put both of those together. And we just talked about this on gold. If I want to go against momentum, right? If I want to go against the momentum, what's the best pattern called? It's called a nested pattern. If I have some support levels in the way, what I want to use? I want to use traps. Why traps? Traps are the best setups when you're trying to avoid either selling low or buying high. Okay? So as we zoom in on this right now, go back in, zoom in, we can easily see these measured moves on here. That just adds more resistance there as we go. I want to be selling high, buying low, staying away from the middle. Now, really at this point, a lot of this has to do with kind of how strong we go up, how deep we pull back. You know, for example, if we make a strong run up to that gap, that momentum will be so difficult to go against. I'm going to have to use that one, that two, and go. But you'll notice I'm not going to have that big of a concern at this point of that rising trend line. So if I can get these, if I can get this market to get up around these highs here, then I know I've got the buyers obviously well in control of this trend. I'm worried about that trend line. The only way I can sell this is I can't just sell into one buyer failure. I want to wait for them now to try once, try twice, and then once I've got those buyers trying a couple times on that pullback, then I know exactly where their stops are, and I can literally sell right into those stop losses. But again, that is a very strong push higher. If I was to, instead of that, if I zoom in a bit closer on this, if we just simply push up into the top of this channel, for example, or we, kind of stair step our way in and then slam lower, I have to worry about this rising support trend line. And as that moving average comes over now, I still want to be a seller up here, but that rising support now tells me it's one try for the bulls, it's two try for the bulls, but now I have to be more aware of my surroundings, and now I'll look for those traps. Right? It's a nested failure pattern because momentum is bullish. It's a trap high because you're trying to avoid that rising support trend line. Okay, that's going to keep you out of trouble on this. Now, there is possibly a chance here that we may go up. We may kind of tap that high and come crashing back down. So, again, we'll still keep looking for those traps here. That's going to be a critical component of this because we have this trend line coming up. So we may not get that big run higher. It may just simply see this strong move. They may try to double top that high, right? Get their job accomplished. And then we may see the one, the two, and the trap high from there. So really, it's all about this trend line. This trend line is really the biggest challenge right now. Now, I'm sure you're wondering, Joe, why are we trying to go against this momentum? Why don't we try to be a buyer on this? Well, the first reason is it's a range, and ranges are magnets. This is not a trending market. There was a big strong move down, but again, we spent a lot of time here chopping around in that range, went below it, crown reversal back in. Again, I think those bears got what they wanted, and they walked away, and they're kind of allowing these buyers now, right, to grab this thing and hold on to it. So what would be some options here to be a buyer? Now, you got to remember where you think you're trying to go here. They're trying to go up to that 87. So one option would be 1, 2, 3. Mark up that high, mark up that low, and buy the low of that hidden channel. This will obviously be a very aggressive setup because of location, which means you're going to want to make sure you get a really good, strong momentum push. Now, if we get that real strong momentum push, it will be almost just as good to look for that 2-try trap. In fact, that would probably be the more reliable of these patterns right now, be a 2-try trap off that high. You can probably still go out and get that hidden channel here. The difference, though, is that 2-try trap pattern will really make it obvious those bulls have control of this. Because what happens is it gives you these really shallow pullbacks. When you see a market make a strong run up and it won't even pull back to the moving average and it makes another higher high, what does that tell you? FOMO. FOMO is what it tells you. And that means anytime we see FOMO, we know there are pros waiting just below those lows to try to grab the discounted prices before they miss out on that move. So if we don't see that if we don't see a very deep pullback on it, that 2-try trap pattern is certainly going to be on our radar here. And again, as I mentioned earlier, if we can get this thing to keep going here, right? Let's say we get a 1, 2, 3 and a big move higher here now, right? So they pop up. They hold the pullback. They blow through the gap. Now we know where we're going now. Now we're going back to retest that big high up there. Now we can find our new channel and we can buy off the low of that channel. And again, if you were to zoom in on that area, those are almost always going to be a seller failure into a bullish pullback combination. We see these very, very frequently, right? So if you were to kind of zoom in on that little area right there, that's the setup we're looking for there. And again, I'm talking about these patterns by illustrating and describing them. I include hundreds of examples of these patterns as part of the free trading course. So make sure you grab that in the upper right-hand corner, or just simply get registered with me as a new member and come out and trade it with me tomorrow, and you'll get all the cheat sheets, all the checklists. I'll put all the membership information in the description of this video. So now we kind of know how we want to be a buyer, right? How we want to be a seller. Will we go up and come back down? Will we poke its head up and traps to avoid this, right, this rising support? Will we collapse back into that range again? I mean, think about it. If we collapse and just go back into that range now we're just going to cherry pick above the highs here, looking for buyer failures to sell above the highs, just like back here, right? Just wait for it to pop its head up, wait for those buyers to buy the pullback and sell into those stop losses. That's the same stuff we'll look for over here. And at the same time here, don't be surprised if this thing makes a run 1, 2, 3 lower. Remember, we get a lot of known unknowns, a lot of kind of headlines that we are still waiting to hear this week. If the market takes off to the downside, I'm not going to sell it as it goes lower because obviously we're at the bottom of that range. But if I can see a very strong move here, for example, if we can get a 1 strong move down, 2 hold the moving average, and 3 big jump off the EMA, we call those 1, 2, 3 breakouts, 1, 2, 3 reversals. I'm going to mark up that low. I like to mark up those hidden channels off the high, and then of course look to sell off that high. This is one of those hurry up and wait setups because you can't trust the first pullback. You can only trust that second pullback, right? Because, as you can see here, a strong move down is simply not enough to want to sell that first strong move down. They've got to hold that move, right? You don't want to be trying to sell that first pullback. It's just not a very reliable setup. That's all. We want to be as reliable as possible in our trading, get our winning percentages up. That's the most important thing, right? You want to get those winning percentages up above 80%. It makes everything easier, right? Makes your account easier, makes your emotions easier. It makes trading more enjoyable. So I would much rather have, for any of my clients, skip the lower probability trades, focus on the more higher reliability setups, even if that means you don't trade as often. Right, get those winning percentages up, build that foundation, get yourself some momentum going. Then you can always widen out the parameters and trade more from there. Okay, so I think we're looking good here on the S&P 500. Again, make sure you grab that free trading course or come out and join me tomorrow as a brand new member. Next up, let's wrap things up here tonight on the crude oil. Jumping over to the oil here tonight. Now, I saved the oil for last because I want you to see here, right, kind of how this thing plays out. Now you know gold tells you strong move up, expect another leg. The S&P confirmed that second leg, which we saw on the chart before. What do we see here now on the oil? We start off with that strong move down. And look, they almost came back and spoiled the fun for those bears. They almost came back and negated that entire move. The fact that they didn't retest those highs, what does that mean? That means there's a big old bullseye right at that low. There's a big bullseye right on that $22 a barrel. And if they keep this party going, like I said earlier, it doesn't look like that 20 million barrel per day cut did anything, because if they can push through this pendulum swing, that $20, and again, this is where if we start seeing this deal fall apart, I would think $20 a barrel should be a given by the end of the week. If again, this is very much a big assumption, assuming that we hear some more headlines about people not following along with this production cut. Remember, that's been the Achilles heel of OPEC and production cuts. Everybody says, yeah, cut production. But not, you meant my production? No, but that affects my income and I can't pay, that's what happens. People say they will, but then a week later they realize, wait a second, so-and-so is still pumping oil, right? They shouldn't be doing that much. And we start to hear those headlines and things start to fall apart. It's been a typical scenario on oil I've been watching oil for almost 15 years. So it's been like this forever, almost forever, I should say. So we know we're bearish here on the oil. Big push down. We know the bears want to retest that low. We also know we've got this big old range here, this juicy trading range. So what does a range tell me to do? Ranges tell me to buy low, to sell high. Now, is there a directional bias right now to this market? Just a little bearish, just a little bit bearish. You probably don't need much experience as a technical analyst to think, I think we're going to stick to the sell side here. And if we do want to be a buyer, what do we need? We need nesteds. We need some sort of really reliable setup if we're going to be going against this momentum right now, right? You better have a good reason to be buying this market. And I'm going to talk about the buy side here in just a moment. So we know we're bearish. We know we're underneath the range, right? I want to sell, and I want to sell up around these highs. If I'm going to be a buyer, you've really got one option. You've got to wait if you want to buy this market. You've got to wait until they reach that low. Because once they reach that low, just like we saw on the S&P, pack it up and get out of town, right? Once those bears get that low, you're going to probably see either one of two scenarios, either a reversal off the low. We'll look for that crown reversal, or you'll see this market turn sideways into a new range. Like on gold, we talk about how gold might kind of move that range up. They may move this range down. We'll grab that here in a second. Or they may blast right through that low, and we might be looking for that next leg down to that $20 a barrel. So that's kind of the goal here once we go lower here. Now, I've got let's talk about the sell side first. I think that's going to be the more responsible way to do it here. Let me clean up this chart a little bit. If you're still here with me, I know you're one of the best out there. By the way, if you're still here with me right now, hashtag still here, hashtag 1%. Right? If you're still watching this video right now, you are exactly the person why I work so hard on this video. I would have killed for this type of knowledge when I was a rookie as well. So hashtag still here, hit that thumbs up button. And if you haven't subscribed yet, you definitely need to subscribe to this YouTube channel. Okay, how do we sell this market? I'm looking for resistance, right? Looking for resistance. I can line up these lows, right? I can line up those lows. I can bring them up around these, come on, Joe, up around these highs, right? And I could look to combine all of those levels of resistance. Now, this is where momentum is a big part of this. There's a couple scenarios I want you to consider here when it comes to selling. There are basically two shorts off the highs, and there's one off going lower. The first one is, let's say we go back into the range and we stumble around for a bit, right? We go back into the range, we stumble around a bit. What does that mean? Well, it means momentum is not a big factor right now. So if I can get a pop above the range now, is the market really that bullish? No, it's not, right? It's not. Very different than if it just went straight up. I think that makes sense, right? So if we kind of poke around a bit, we chop around a little while here, a couple hours overnight, and then all of a sudden the bears, they run out of bullets, and what happens? The market jumps. Okay, now I've got my levels of resistance overhead. I've got my sell zone overhead, which is calculated from the range. Now I wait for those, what we assume to be inexperienced traders, trying to buy the breakout pullback, and we sell into those stop losses. A very simple buyer failure setup up above the top of that range using these levels of resistance as our guide. Now, the other scenario would be if we run higher. Now, this is where you've got to be careful because now, yes, I do want to sell, but that momentum is pretty intimidating. Now, what's the best pattern if I want to be a seller, but I'm worried about momentum? It's a nested pattern, right? This is why I wanted to sequence these this way tonight, right? One try, two try, and back up we go from there, or back down in, right? One try for the bulls, two try for the bulls. Again, we shoot up. It's not a breakout yet. We'll talk about that in a moment. What we want to do now, though, is anticipate. Buyers try once, buyers try twice. Then I know everybody's in, and I can sell into those stop losses. Now, keep in mind, sometimes these strong moves up, they sharply pull back, right? And they go 1 and 2. And if I don't want to sell the middle of that range, if I wanted to avoid trading inside the range, anytime I want to avoid a level of support, right? What's the pattern? Traps, right? Traps. Trap high. You can see a great example back here. We go up. There's one. There. Oh, trap high. And that's where everybody wants it, right? They want that trap because nobody wants to trade inside the range. Same basic idea over here. Does that make sense? Right? If it doesn't make sense, drop me a comment in the comment section below. On my next video, I'll make sure I go deeper dive into how momentum plays into this kind of fade the breakout, right? Do I fade it? Do I trade it? If I go up and we start 1, 2, right? They start gasping for air up here. Yeah, you fade that. Or do they go up? Do they hold the pullback and jump off the moving average? Oh, now you're going to trade it. Now this is a breakout. That's a 1, 2, 3 breakout. Now remember, this is a hurry up and wait pattern. You can't trust that pullback. If you're telling me you could trust that pullback, then what about this one back here? That was a big strong move. That's a nice green candle. Why don't we buy that one then? See, that's the problem. It's very difficult to tell. I don't want to hear, oh, momentum, some moving average cross is the filter. Give it time. Give it time. You will soon realize all those crosses, all those divergent signals, they are, well, and I'll let you experience that yourself, right? But I'm going to warn you right now, it's very difficult to filter out a breakout or a breakout failure. It's very, very difficult. I will give you one thing. If you trade in breakout pullbacks, you better take them all. That is the one thing about breakout pullbacks. Don't be trying to cherry pick. You cherry pick, right? The old saying, right? You go cherry picking on those breakout pullbacks, you're going to pick all the bad cherries and you'll end up missing, right, all the good cherries. So if you can trade those breakout pullbacks, take them all. And this is where that's not easy. It's not easy, right? You go loss, you got to take the next one. You got to take them all. I don't like to play that game. It's a very difficult. You'll go broke before you figure that lesson out, like I did a couple times when I was rookie as well. So again, we're not going to buy that pullback, but once we see that big jump off the high, okay, now I'm good. Now momentum confirms. Now I can mark up that new hidden channel. And now, again, anytime we see a strong move, we should almost have a guaranteed retest of that high. And at this point now, where would those buyers be trying to go? 27. 27 is that big range from before. So 27 is a pretty easy target if, again, this is just a very big if right now. If 20 million barrel per day cut didn't do it, unless we see something, again, there'll have to be some more news headlines. We need some new information that would give these buyers the green light to keep, start buying this stuff. It could easily happen. I'm not going to say it won't, but I'm not going to believe it until I see it. And once I see that 1, 2, 3 breakout now I can get pretty aggressive and buy off the low of that channel. And keep in mind too, a lot of times this 1, 2, 3 breakout will lead into those 2-try traps. Love those 2-try trap patterns. And again, you'll usually know it's 2-try trap because it won't give you a full pullback to the moving average. Then it will sneak right below the EMA. And remember, if they can't get away from the moving average, what is that a sign? It's a sign of bullishness, right? Trade it, don't fade it. We're going to mark up that high, mark up that low, always incorporating those levels of support on those trades. Now, that covers the sell side and the buy side as we go higher here. Now, how do I sell this thing as we go lower? Going lower is pretty easy now that you know what a breakout looks like. So it'll be a 1, strong move down, 2, pull back to the moving average, and 3, jump off the EMA. Again, I'm not going to try to sell that pullback because you can't trust it. But I will sell the next pullback once I find my new hidden channel, assuming, again, I've got some good momentum, right, going through that low. That is the key. Also, too, to buy this market, we know where the bullseye is. If I can get down into that low, get down into that 22, I'd love to get that big pendulum swing. The amount of the move above the range is the amount of the move below the range. I'd love to tick all these boxes. And then I mentioned this on the S&P, right? The S&P had this pattern today. It's a 1 try, it's a 2 try, and a trap on this. Now, usually what happens is we look for traps to avoid buying high or selling low. In this case, it's a reversal. And traps are, what's the best way to describe it? In this case, a trap is meant to free up space away from the sellers. Because what's going to happen is the bears are going to come in and the bears are going to want to sell high. So I can't buy up there. I have to try to get in as low as I can get on that trap. That's the only way I'm going to be able to get myself enough space, because there'll be more sellers coming in right above that high again. Right? I need this distance, right? I need this open space right there. That's the easy money right there. Now, I shouldn't say easy, right? It's hard money to make because you're going against momentum, but that's where your window is. You cannot, well, you can do whatever you want, but if you wait until the market gives you evidence of this, you're now buying right into more sellers now, right? There'll be a lot of bears coming over. They'll be trying to sell off these channels. It's a very dangerous trade to be buying that high. That's why, and again, you can see it here on the S&P. If I go back to the S&P real quickly here, right, you can see here as they run lower, they get their low. They then get that 1 try for the bears. And again, the bears are selling here. The bears are selling here. They don't want to sell. They don't want to buy high here. They wait for that trap low and buy that trap low. That's the pattern that I'm looking for, right? You can see these buyers here right now on the S&P. So crown reversal off the low, plunge all the way through, 1, 2, trap and go. You're going against momentum, so I would recommend a trap on this. If you want to get a little bit more aggressive, that regular nested pattern will work, but don't be surprised if that nested pattern ends up going up, pulling back, and trapping after the fact here. I always like to get those traps whenever I'm so blatantly going against the trend like this, because it's the only safe haven you have when the market's trying to reverse. All right, guys, trade it or fade it. It all has to do with momentum. A lot of it has to do with how the moving average responds. And don't forget, we covered a lot in this video tonight. We're going to do it together every single morning with all of our advanced members in our trade room. Like I said earlier, I'll put all the membership registration information in the description of this video. If you're on the blog at Sideways Markets, just look right below the video right now for that big blue button. Please don't be afraid to call me this evening. If you have any questions, I'd be more than happy to walk you through the entire registration process, or use that live support tool on the right-hand side of the website. And as always, guys and gals, I really appreciate you guys being here tonight. If membership isn't quite right for you right now, it may not be good timing for you. I completely understand, but make sure before you finish up tonight, make sure you grab that free trading course as part of our free trial. It gives you so much value at a great price of free $99. So grab that off the website, learn the patterns, learn the strategy, and come back and see us again here soon. We'll do it again tomorrow, same time, same place. If I don't see you guys tomorrow morning in the trade room, I'll see you guys back here tomorrow night for the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.